A very good evening, market participants and members. Welcome to another open house session on reversal trade cancellation mechanism, which is shortly called as RTCM, for which recently on 17th of December, we have issued a circular that this particular mechanism now will be applicable into equity derivative segments also, in addition to CM segment applicability, which was done earlier a few months back. Now, to share the glimpses and the explanation for this particular mechanism, which is going to be applicable particularly for equity derivatives, I have with me Mr. Benoy and Mr. Bireshwar, who will be taking us through today's explanation. So before going into much of the details, I would request Mr. Bireshwar to give us a brief about the concept that is being applicable so that we can take it forward. Bireshwar?
Yeah. So good evening, participants. As you would already know that in CM segment, we went live with reversal trade cancellation mechanism from July 7th, 2024. Now the similar mechanism now we are bringing in FAO, equity derivatives. This will be live from Jan 13, 2025. Now what we are also trying to do is that during this process, once we issued the circular, we are also doing a parallel run from our side, and wherever trades are getting shortlisted, we are actually sending those alerts to the trading members, and we'll continue doing this till Jan 13th, so that members and the trading members can adjust their system and also understand how it works. However, if these trades or cancellations or alerts you have not received in CM segment, you can be you already have an idea what's going on in this system. What we will do is that we'll first go through the salient features of the circular. After that, we have an example. We have an Excel sheet or a table, which step by step, as each and every trade progresses, will show you how the percentages change. All the percentages that we have taken or referred in this particular sheet are all hypothetical. They are not actual thresholds that we are actually using for computation. They are hypothetical, just to show you how it works. And first, so that's how we have structured this particular seminar. First, we'll give a walkthrough of the circular, and then we'll take you through the live example. So Binay will start with the circular.
Thanks, Bireshwar. Welcome all.
So by the time we are sharing the screen, participants, as Bireshwar told, we'll be taking you through some illustration as well. But mind you, that will be for indicative purpose only and not the actual one. So you'll have to get an idea. As he mentioned, the CM segment applicability was already in live with effect from 7th of July 2024. Now the equity derivative segment is going to be applicable with this RTCM concept with effect from 13th January 2025. And that is why well in advance we are doing this session. By this time, we think that you are able to see the screen now. So Benoy, if you can just make it full screen and we can go ahead with that. So as I was mentioning, that's why we are doing the session well in advance so that we can share with you all the nuances which you can take care and accordingly keep your systems ready in case required with any of the factors that you need to take care about.
So to begin with, as Bireshwar mentioned, the RTCM for cash CM segment was already live from July 7th, 2024. So it's been almost 6 months since we have gone live. And now we are come up with the mechanism for F&O segment, which is to be implemented with effect from Jan 13th, 2025. And we will be having a mock session on the previous Saturday, that is Jan 11th. So now coming to the mechanism. So the salient features of the mechanism is, so as in cash market, this mechanism shall also be monitored on an intraday basis and between both the pairs of the traded parties. So for each of the clients, the monitoring will happen on the PAN basis. So if it is a client who is a proprietary client or a non-custodial client, it will be on PAN basis monitoring. And for clients who are custodial participant code clients, for them the CP code based monitoring will be applicable. So now, at the exchange end, what will happen is all the trades for the combination. So for example, PAN A and PAN B. So suppose PAN A is the buyer and PAN B is the seller. So for these combination, all the trades will be aggregated in first leg or second leg. So in this case, the first leg will be say PAN A is the buyer and PAN B is the seller, and second leg will be it is when the reverse position is taken, wherein PAN A is now the seller and PAN B becomes the buyer. So this entire aggregation will be done for each and every contract. So it will be checked at every contract level. So now, so every time there is a trade, the aggregation, as I mentioned earlier, it will be aggregated at individual contract level, wherever such aggregated quantity between the PAN A and PAN B, are breaching the thresholds at the exchange. So there are basically four parameters which we look when we look at any trade which is eligible for cancellation. So coming to the parameters, so these are the four parameters. So all the four parameters have to be met so that a trade is eligible for cancellation. So if we take the parameters one by one, so the first parameter is about the turnover, the reversal quantity to the market quantity. So here what we do is we look at the combined traded quantity of the pair for both the legs to the extent of reversal and compare it with the market gross. So what is reversal quantity? So now if we take an example, so suppose the pair has bought for 500 quantity in the first leg and they have sold 600 quantity. So in this case, the reversal quantity is 500. So this quantity will be compared with the market gross and to arrive at the threshold for the first parameter. So we have a detailed example in the next slide. So briefly, I'll just touch upon the parameters and then we'll go to the example, which will give a much clearer explanation. Then second is about the reversal ratio. So this here we look wherein what is the reversal quantity between the trades. So suppose if a client has bought 1,000 between them and then they have sold reverse 500, then what is this ratio of 500 compared to the overall trading which they have done? So that is about the reversal ratio. Then the square of difference. So what is the profit or loss earned within this transaction? So how we calculate the profit and loss? We look at the reverse quantity, and based on the average sell and the average buy price, we derive at the profit. So again, there is a threshold for this profit. So if this is breached, then this parameter is fulfilled. And lastly, we have the reversal quantity done by the client compared to his own trading. So here, so reversal quantity for both first and second leg of a PAN till the point in time in the script is compared with the total traded quantity by each PAN in the pair of PANs in the script for that day. So whatever reversal quantity is done by the client A, we compare it with the total traded quantity of the client A in the script, and the same is done for both A and B. So now we'll go to the example, but again, all these four conditions have to be met for a trade to be cancelled. That is of most important.
So all the four conditions should be breaching the thresholds as you have rightly mentioned, right? Okay.
So now taking the example, so these, as Bireshwar mentioned, these are all hypothetical examples, and we have just taken some random thresholds. So in this example, we have taken the reversal quantity to market gross threshold as say 20% and reversal ratio as 45%. We have taken the closeout difference, that is the profit, as 4,000 rupees, and the portfolio, the percentage of his own trading. So reversal quantity compared to the percentage of the PANs trading in the specific contract. So that is taken as 30%. So now if we go trade by trade, so assuming now this is the order book of this contract X. So suppose there is first trade between client M and client P. So so assuming this is the pans. So based on the pans, we will keep on aggregating these tables in the database. So first trade is say for 700 quantity, the price is 5. So obviously, since this is the first leg, everything will be 0. Since there is no reversal leg over here, everything is 0 because reversal quantity is the numerator, right? And so now then there is a second trade between A and B. Okay, so in A and B, they have traded 1500 quantity. The price is 10. So again, this is the first leg. So all the thresholds are at 0% as of now. Now the third trade here, this is a reversal trade. So in the second trade, they have done the first leg 1500 and then they have reversed 200 quantity out of this 1500. So between B and A, and they have reversed at say 5 rupees. So now here the reversal percentage, we will keep on calculating for all the 4 parameters. So now in this case, the reversal quantity is 200 and the percentage is 200 divided by 1500. So it will come to 13%. And the profit is 1000. So that is 5 rupees into 200. So that is 1000 bucks. And then we will calculate the percentage to market gross, wherein we are comparing the reversal quantity to the entire market turnover. So here again, we will look at the gross quantity. So that is entire market. So we will take the trades between A and B, that is 1500 plus 200, and the other market participants. So that is 700. So whatever trades are there in the market, everything is aggregated on a gross basis, and the reversal quantity is also grossed up. So the percentage comes to 16.66%. Then coming to the reversal quantity compared to his own trading. So for pan A and B, both the calculations done, wherein the reversal quantity is 200 and compared to his own trading. So that is 1700. So since this is gross, the reversal quantity is also grossed up. So that comes to 23.52%. And same is the case for client B. So now similar fashion, as and when the trades is happening, these percentages keep on updating at every trade level. So now again, there is a A to B trade. So this is again first leg trade. So the quantities, the percentages are updated. So here, if I again take, so now the total market gross quantity becomes 2400 plus this 500, 2900. And since there is no reversal quantity remains same, this is the first leg. So now in the second leg, the reversal, again, they have reversed 200 quantity. So this 200 quantity gets, again, we update the reversal percentages. So now, so total 400 has been reversed. So this trade number 3 is a reversal trade and trade number 5 is a reversal trade. So total 400 quantity has been reversed between A and B, and the total quantity is 2400. So it becomes around 20%. Then the profit is 2000, and again the reversal percentage is calculated compared to the market gross. So again here 400 is the reversal quantity, 400 compared to the market gross, it comes to 25.8%. So in similar fashion, every trade by trade, we are keeping on updating the percentages. So if you see in this table, the percentages updated in green are wherein it is currently not meeting the threshold. So now, so in trade number 3, all the percentages are well below the hypothetical thresholds, which we have discussed here, 20%. So the reversal percentage is 45%. So here it is 13%, and to the market gross is 20%. So it is 16%. So it is green, and the percentage to his own trading is 23% for both the clients. So it is 30% over here, and the profit is 4000. So in trade number 3, everything is green. So none of the thresholds have been met out of the 4. Again, in trade number 4, since this is the first leg trade, again it is everything is green. In trade number 5, which here now 3 of the parameters have turned to red. Two of the parameters. The reversal to market gross and the pants trading is turned red, and the profit and the reversal percentage, it is still green. So they have not been met. So there will be no action at this point in time. Again, in trade number 6, all the parameters have turned red, including profit, but reversal percentage is still at 40%. So it is still not reached the 45% threshold in this example. And in trade number 7, where all the thresholds have been met. So if you see, everything is red now. So the reversal percentage is 45%, which is as per our hypothetical threshold. 4,500 compared to 4,000, the profit percentage have been met. Percentage market to market gross is 50% compared to 20%, and the PANS activity is 62% compared to 30%. So now, since all the thresholds have been met, the trade number 7 shall be eligible to be cancelled, and trade number 1 to 6 are anyways not meeting, all the 4 thresholds are not being met, so those won't be eligible for cancellations.
So one thing to note here is that when we talk about clients, one particular client's reversal quantity versus their own gross quantity, which is the last 2 columns, both the clients have to be, percentage has to satisfy. If one of the clients are satisfied, the other client is not satisfied. So you can see then the last column will turn green, and therefore no cancellation will happen. So all these 5 parameters have to be met. The last 2 are the same parameter, but for different clients.
Correct. So what are the other major features? So now this mechanism, so similar to cash market, the orders will keep on getting aggregated until 10:30 a.m. So same as in cash market, and so after 10:30, the exchange shall look at the conditions are being met or not. So till 10:30, there shall be no cancellations. So at 10:30, if we find any trade which are meeting the thresholds and all the 4 parameters, the cancellations shall kick in for the respective trade. Only and one thing to important point to note here is only the trades which are crossing the threshold will be cancelled. So suppose in the first leg which we saw, the entire trade won't be cancelled. Only the second leg, the trade which is breaching the threshold will be cancelled. So first leg there won't be any impact. Second leg also, trades which are below the threshold, there won't be any cancellation. Second leg, trades which are exceeding the thresholds will be cancelled, and the particular trade entire quantity will get cancelled. There will be no partial cancellations.
And a small clarification: when you are saying that trades from 9:15 to 10:30 shall be accumulated, and 10:30 a.m. This RTCM will kick in.
Right.
So the eligible cancellation can happen from that accumulated part as well at 10:30, or
Yes.
it may not.
Right. Yeah. So the trade could be, so we are accumulating up to 10:30. The cancellations it can be anywhere between this time. So the trade could be of 9:15 as well. Why we are doing this accumulation? Because in certain contracts there could be less in the beginning of the day, there could be less liquidity.
Correct.
So we don't want unnecessary cancellations. So by 10:30 the book is enough built up, so that we just unnecessarily don't cancel any trades. So
sure.
That's the logic. So again, so this mechanism shall work until 3 p.m. This is same as in cash market. So half an hour prior to the market close, the mechanism shall be shut down by the exchange. So between 3 to 3:30, exchange shall not be cancelling any trades. Second point is about the client code modification. So any client code modifications which have been done during the market hours shall also be considered for this reversal trade cancellation mechanism. And as soon as the exchange cancels any trade, the following message which is shall be broadcasted on the trading workstation. So the message in bold, that is trade cancel, the trade details will be the trade number and so on, and the message shall follow trade cancelled by the exchange, and the need dealer ID shall be disseminated on the trading workstation. And so now on which contracts this shall be applicable, the exchange shall also be disseminating the contracts on the previous day. So the applicable contracts on which this mechanism shall work, we shall be providing a file on the extranet on the previous day itself. So if you are, say, for tomorrow's trading, the exchange shall be downloading a file on the extranet similar to cash market, wherein the file is being provided, but that is on a monthly basis. So here the daily file shall be provided, and on the extranet, the path is FNO common slash surveillance slash RTCM.
So just to reiterate, you rightly mentioned that for cash segment, which is CM segment, it will be end of month file provision, wherein the equity derivatives, which is going to be applicable, it will be end of day, everyday file provision.
Yeah.
For the contracts that will be eligible for this mechanism for next trading day. Is it correct?
Right.
Okay. So participants, please take due note of that, because till now for CM segment, you might be referring to end of month file, but for FNO, you will have to keep referring daily file, which will be provided at end of day for the next trading day.
So how have we arrived?
Yeah, so this is the selection criteria with which we are starting. So we're starting with very means which we consider very liquid based on backtesting we have observed. So this is the first criteria which we are selecting. As we go along, we might change this criteria also. So yeah.
So how do we select the contracts on which mechanism shall be applicable? So we have bifurcated into two parts. So basically we have monthly expiry contracts and weekly expiry contracts. So all the contracts where the expiry period is, say, more than 40 calendar days, all the contracts shall be applicable in this mechanism. But however, contracts which have expiry less than 40 days to expiry, for stock futures, it shall be 10% away from the underlying price. And for index futures, it shall be 5% away from the underlying price. So if we are providing a file for tomorrow, so today's underlying price shall be considered, and we will take all contracts which are 10% away for stock futures and 5% away for index futures and options. And for weekly expiry, again similar. If it is more than 15 days of expiry, all the contracts shall be considered. And if the expiry is less than 15 days, all strikes which are 5% away for index contracts shall be considered. We don't have stocks in weekly. So for index, all 5% away. And for monthly, it shall be 10% away with 40 calendar days to expiry for stocks, stock options as well as index options.
So the file will contain the eligible strikes as well. The strikes will also be mentioned in the file.
Yes.
Okay.
Right. So yeah, so I think we are done with the presentation, and now we are open to questions.
Participants, so till that time, we encourage that you can type in your questions, whatever questions you are having in the question box itself. We have already received some questions. We'll start taking it, and meanwhile, you can type your queries in case it is not covered so far. Let's start. Mr. Shailesh is asking how, I mean, definitely he's asking from the client perspective, but he's saying that there may be challenges to convince client if the trades are cancelled later. So can there be some, think through that of reversal? What he's saying is, a client does not know that his PAN matching will pair into reversal trade. So basically, he's asking, it may be difficult to convince client if it is cancelled later, but probably this is how the mechanism may work, right?
So because as you already know, as of today, we have a circular which is in December 2020, where once a reversal transaction is caught, the penalty is actually 100% of profit and loss.
Mm-hmm.
That's a pain for everybody actually. So that that is a post facto penalty that we are levying. So this particular mechanism helps that at the BUD itself we are cancelling, so that this penalty and all administrative we are completely relieved of that. So that's the purpose of this entire mechanism, that we cancel immediately, and the cancellations till 10:30 definitely will be accumulated, but post 10:30 till 3 o'clock, you will get almost instant message back that it is cancelled. So it is not that we are waiting for some time for you to get that cancellation message. It will be an instant cancellation and with a message on the trading terminal. So that way, the transparency will be intact.
Okay. Next, Mr. Aniket is asking two-part question. First, he is asking whether the contract selection for RTCM in FNO is dynamic or static. He is giving the reason of asking the question because wherein one criteria is mentioning 10% away from underlying price in case of stocks and 5% in case of index. So he's asking whether it will be dynamic or static.
As of now, means starting January 13th when we are starting, every day on a dynamic basis, we'll be changing this list because the underline will be moving and hence the strikes, the distance of the strikes from the underline will be constantly changing. So that's why we'll be changing this list every day. And that's how this particular mechanism will work. It will not change once a month as in CM.
Okay. The second part of his question is it applicable for both the legs, that is first and second, under one trading member, since it will be applicable on PEN? And again, he continues that can exchange not apply pre-trade control at order matching level on the basis of parameters mentioned in the circular?
Yeah, so order actually we tried out before doing the trade cancellation. So there were a lot of latency issues. Again, matching if trade like order matching system we bring in controls, there will be a lot of issues on the latency part, which will again be a detrimental to the trading members and clients only. That the trade will take that much less time. And secondly, means that is the reason why we resorted to trade cancellation instead of order cancellation.
Okay, and what he asked is it applicable for both the legs under one trading member since it will be applicable on PEN?
No, so irrespective of the trading member on other side, so even if the trading members are different on the means on the other on both the sides, then also if the PAN is reversing, then the cancellation will be applicable.
Okay, and I guess before session started, Mr. Shivashankar asked whether this is applicable for pending orders only. So we have clarified it is based on trades that is executed, and then the reversal trade cancellation will happen. Okay. Then next is Mr. Gunjan is asking. Circular is unclear on application, specifically on futures contract. Does the circular say all future contracts with expiry more than 40 days and expiry less than 40 days are in scope?
Yes.
Okay. Then again, Mr. Shailesh is asking a scenario-based question. If PAN 1 sells and PAN B buys with different member or same member, then PAN B sells and PAN C buys, and then PAN C sells and PAN A buys. I mean, he is giving an example.
So right now, we are starting with a two-legged system where there are only two pair of clients involved, A and B. The third leg, we were still deliberating how to do the third leg. That means you are talking about a three-legged reversal where there is a transfer from A to B, B to C, and then C to A. That's currently not in scope in this particular circle.
Okay. So, Mr. Shailesh, we hope that it answers your scenario-based question. Then, Mr. Shubham Gupta is asking how to test this in test market for this particular functionality implementation. So, is there anything specific to test in test environment?
So as I said in the beginning, on the previous Saturday, we'll be having a mock session where the members will be able to do some testing. And if there is any cancellation, obviously they'll get a cancellation message in the mock itself.
Okay. And he also asked how this is different from self-trade while placing opposite leg order with same account.
Self-trade is wherein the same PAN, it is the same PAN on the both sides. So here, obviously, it's not the same PAN on both sides. So that is the basic difference.
So in a self-trade system, your buy order will also be of PAN A, and sell order will also be of PAN A, and there is a check on that, and exchange does not permit that. Here, on a particular trade, there are different PANs on both sides. If you consider two trades as your reversal trade, the first trade will happen between A and B, and the second trade will happen between B and A. That's how it is different.
Okay. Next is Mr. Saurabh from Mumbai is asking, after what time gap from trade execution does the trade cancellation happen due to RTCM?
So it is almost near to real time. So even if you've seen the cash market cancellation, so I mean, members would have seen the experience wherein there is not much, time gap between the trade and the cancellations.
Okay. Next, Rupesh from Pune is asking two-part question. First is where to get the file on FTP. So that we have already covered. We have shown the path over screen as well. And it is mentioned in the circular also. For both FNO and CM segment, there are separate paths, which in respective circulars it is mentioned. Coming to second part of his question, what will be the impact on the net position if the trade gets cancelled due to RTCM?
Yeah, the obligation will not will be adjusted to that extent. So it will happen regarding any other trade annulment or cancellation that happens where if the trade is cancelled, the day end obligation will not contain that trade.
Okay. Next is Mr. Milind Kenny from Mumbai is claiming that this is not available for testing in UAT yet. So if you want to comment on that.
Yeah, so it is there in the mock session also. Whenever we have the mock session, that is the, currently that is the facility where the members can test the same. And one more thing is this is not totally under the members' control. So because there is other factors like percentage to market gross and all. So that way. So in the mock, I think that would be currently that is the place where they can test the function.
Okay, and for which probably will issue the subsequent circulars
Right.
and under which it will be mentioned.
Yes.
Okay.
In all probability, January 11th, you will have the mock.
Okay, sure. Next, Mr. Chitransh Verma is asking 3-4 part question. First is in the cancellation message, probably is asking what will be the trade details that we will be providing. And he's also asking whether those messages will only be provided over NEET or all the terminals.
Yeah, so the trade number is being provided in the cancellation message, and it is also going to the CTCL. So if you refer the NNF document, the relevant transports which is there for cash market, similar message shall be sent for FNO cancellation as well. So both on NEET as well as CTCL terminals, you should be able to get the message.
Okay. Also, he wants to have some idea about the thresholds that will be enforced for this mechanism.
So the thresholds are obviously these are confidential parameters. So
and there is a reason why we have done that. So because once the threshold is known, people will underplay that. So that's why thresholds is not known. And we can actually confirm one thing to the participants is that we have done thorough back testing and we have actually seen that only wherever multiple thresholds get, and the thresholds are quite decent in the sense, quite higher thresholds, so that we have ensured that to the maximum extent that only non-genuine appearing trades are only getting cancelled. Randomly, each and every trade doesn't have the risk to get cancelled. Okay. And that too in contracts which are relatively liquid. So these two we have ensured in back testing also.
Okay. Mr. Nikhil from Gurgaon is asking, can they get the timestamp of the original trade which gets cancelled through RTCM? Will they be getting that timestamp?
You get the trade number. So with the trade number, you will be able to find what's the other, all other details will be with you.
Okay, Mr. Aman is just giving a requesting feedback if this regulation implementation can be pushed because it is very short notice to evaluate the changes.
No, actually this we have been talking about for 1.5 years now. So initially we floated the idea long back saying that we are coming up with this something. First it will be introduced in cash and then in FNO. So cash we have implemented in July. So now we are implementing in derivatives. So and whatever mechanism we followed in cash, this similar mechanism we are following here. It's not a immediate new thing that we are doing.
Okay. Next, Mr. Jatin Vora is asking a question which probably circular clarifies. Still, he is asking, we have mentioned the criteria which is having expiry more than 40 calendar days for monthly expiry. He is asking whether if it is under 40 days, then it will be executed or be cancelled. I mean, probably he is asking whether that will be eligible for this mechanism or not.
Yeah, so there are two prong parameters here. One set is that you compare the expiry. Beyond 40 days for a monthly contract, all strikes are eligible with this mechanism. Mm-hmm. Now, within 40 days, we have kept all strikes which are within, say, 5% and within 10%, not applicable with RTCM, the strikes which are beyond 10% or 5% respectively will be covered under RTCM. So there are two pronged approach. There is a expiry thing, and then there is this distance of strike from the underlying.
Okay. Mr. Manish Shah from Anand again asked for threshold clarity, which we have already answered. So moving on, again, Mr. Jatin is asking in para number 1 and 2, script is mentioned for checking the parameters. We believe in case of FNO, market gross traded quantity in script will be considered and on in the particular contract. I mean, the understanding is right or not. Though question is not that clear, it seems. But
as I said, if you see the circular also, it is clearly mentioning it is at contract level. So it is all the thresholds will be checked for the respective contract. It is not the entire underlying as such.
Okay. Mr. Vinesh Nagpal from Mumbai is asking a different perspective. He's asking if first leg and second leg should happen on the same day. I mean, he's giving example. If a client has one carry forward position from previous day, then what will happen?
Yeah. So as we mentioned, this is all everything is on intraday basis. So we are looking at the trades for the day itself. We are not looking at previous days trades or so on. So only intraday trades have been monitored under this method.
Okay, and next, Mr. Atul Agarwal is asking one thing which I'm not too sure whether you will be having a input or not, but he's asking as per backtesting result, how many trades were eligible for cancellation in past 1 month?
So as we said that wherever they are eligible, we have sent the communication to the respective trading members. So if you have not received, that means your trades were not eligible to be cancelled.
Okay. He again is asking, which probably you have covered, but he's asking whether only the second leg will be cancelled or both the legs will be cancelled.
Right. So the second leg, obviously, which are meeting the thresholds and crossing the thresholds for all the 4 parameters, only those trades shall be cancelled.
Okay. Mr. Jatin is asking, does your explanation mean that if order is passed through RTCM, then there is no trade which is manipulative or profit loss reversal trades? I mean, I'm not too sure what he's asking, but
so this is just a like based on certain thresholds, we have tried to devise a mechanism by which, like again, it is all objectively criteria based. We in no manner are saying that if there is no trade cancellations, that means there are no genuine trades. That's never our objective. This is a particular threshold based mechanism that we have brought in. However, the obligation of the non-genuine trade still remains on the members. This mechanism will help in reducing that risk of that obligation.
Okay. Mitesh from Gandhinagar probably wants to clarify again about the accumulation which we mentioned about 9:15 to 10:30 period. He's asking, will market volume be taken for all 75 minutes for first 75 minutes or it will be on trade done basis?
Yeah, so at 10:30 we will check the entire market volume. So so obviously when it is calculating, it is checking at that point in time. But at 10:30 again it will compare the entire market.
But at every progressive step, so be it 10:30, 11, 11:30, when it's checking for the market gross for the contract, it's checking from 9:30 onwards till that point in time. The circular also says that.
Okay. Dwaj Single from Bangalore is asking about one particular thing. That is one trade cancellation transport possibly, which is trade underscore cancel underscore out 5441. So he's asking whether it will be same as this RTCM code that will be passing for cancellation or it will be different.
Yes. So as we said, this mechanism is already live in cash market and the same transport is being used for FNO as well. So members would be already well aware of the
Mr. Purushottam wants to have the clarity on order book side. What will be happening on those sides, order book side?
So we are not disturbing the order book at all. So it's all on a post-trade basis. So nothing will happen to your pending order book, etc.
Okay. Mr. Ajasa probably is asking, will the RTCM be applied only to the list of contracts published at T-1 as per daily Excel file on extranet, or will it be extended to newly introduced strike prices during the trading session on T-day?
Yeah, so this actually covers the reserve strikes also. So now reserve strikes are also published 1 day before the trading day. And if the reserve strikes meet this criteria, they will also get covered, and that will be those reserve strikes will be included in the list which we publish.
Okay. Mr. Gunjan again just wants to clarify whether this means the current month futures will never be part of the list. If you can clarify.
Yeah, it will never, because 40 days to expiry is not there.
Okay, until any changes in case happen, or it will never be.
So we will. So right now we are going with 40 days. Once we change, we will be informing through a circular.
Again, because it is critical, Mitesh is asking in case significant volatility comes intraday, any revision in strike may be applicable for this. As you said, the reserve strikes will also be considered for the T minus 1.
So as of now, no, because one thing participants should note is that once the liquidity comes in any particular strike, automatically the contract becomes liquid. And as soon as the contract becomes liquid, none of these 4 criteria will be satisfied any which ways.
Okay.
So you have to have satisfied everything. So if it is not liquid and there is a huge movement and the strike becomes active and multiple participants are active in the strike, automatically the chances of reversal will be minimal, because the percentages all will be completely reduced, because the market gross will start increasing. So that way the risk of cancellation will be much less.
Okay, Mr. Rishabh from Gurgaon is asking if any penalty is applicable for multiple cancellations happening through RTCM.
So that we'll monitor, and we have still not decided, but we will monitor that. So it's better that as the non-genuine trades earlier were also, like from the December 2020 circular and earlier also, we were penalizing reversal trades or non-genuine trades, right? So similarly, if the participants control themselves and don't get into such things, so then there is no probability of getting penalized.
Understood. Again, Mr. Gururaj from Bangalore wants to give an example to understand one thing. If client A is buying today and selling to B, C, D, and F clients for consecutive days and keeping profit below the threshold, how do you prevent that through this mechanism?
So right now, as we said, that this is a intraday concept that we have brought in, both for CM and FNO. We are still working on the multi-day reversal. So still multi-day reversal are not covered in this circular.
Understood. So participants, I hope that clarifies, because many people are asking on the similar lines. Next is Mr. Paris Khandelwal from Delhi is asking if a trade done with multi-leg IOC becomes eligible for cancellation or not. And if it gets cancelled, then will it be both legs or only one leg?
So I think similar thing. So when we have given you that example, so we are not looking at what type of order. We are just looking at when the trade actually happens, and then it satisfies 4 of your criteria, then only it will get eligible. So we are not looking at the order aspect at all.
Understood. Mr. Siddhant Agarwal again is raising a small concern. He's saying that where contracts are less liquid, though intentionally they don't want to do a reversal of transactions, it may happen that RTCM cancellation happens frequently for those contracts. So what can be the impact?
Yeah. So as I said, that the entire objective why we have brought this in is that if we do not do this and allow the reversals to go through, ultimately they result into penalties, which are quite huge. So we are helping the participants not to get into that particular mode of violating that December 2020 circular. And this is only part objective fulfilled. Beyond the thresholds, if somebody actually is articulating and doing it, then they will get caught in our, like, apart from this particular mechanism, we'll also monitor otherwise that what's the behavior. And there, if they caught there, then the penalty is still applicable as per December 2020 circular.
Understood. Mr. Manohar is asking, what if trades are executed at unrealistic prices post 3 p.m. because post 3 p.m. this is not going to be monitored for RTCM cancellation?
Right now. So right now we are going with this particular concept as in CM. This is just the starting. And any which ways we are monitoring it at the day end basis. So if they are caught there, then penalty will be applicable.
Okay, Mr. Siddhant again is asking out of assurance motive, are these thresholds mentioned also dynamic and high enough to only filter out non-genuine transactions?
As I said, yes. So as I said that in the back testing, see, nobody knows non-genuinity, right? It is only based on thresholds that that it appears to be non-genuine. We are not going to into any intent per se. So based on thresholds, when we do the backtesting, we have arrived at means only cancellations which are very few, in very illiquid counters, and they all appear to be non-genuine. We cannot definitely establish that they are non-genuine, but they appear to be non-genuine.
Okay. Chetna Gadge from Mumbai, she is asking trade cancellation can lead to a sudden increase in upfront or peak margin requirements in certain cases like hedge break during the day. This may result in fund allocation and client margin shortfalls and potential penalties. So, can there be some measures for such scenarios?
So as we already said that basically in the backtesting, why we have done the backtesting and why we have selected only illiquid stock, illiquid scripts and contracts. The reason is because of this, is that, and we have been doing this for quite some time to ensure that cancellations stay to minimum. So these are all illiquid contracts. These are one-off trades which are getting cancelled. So it's not that the entire thing is getting cancelled. So we believe that the effect would be very, very minimal, and you're getting the trade cancellation messages immediately.
Okay. Mr. Ajay wants to clarify on one part whether members will be receiving any EOD files where all the trades have cancelled during the day, and will it be populated broker-wise also or not?
So as we discussed, as and when the trade is getting cancelled, we are flashing this message on the trading workstation, and member can obviously they can filter out the need itself. There is a functionality where they can filter out the messages and download the.
Okay. Mr. Shashwat is probably asking from technical perspective, but he's asking whether they will be getting trade cancellation messages on both TCP and UDP side. Any comments? Sure, no worries.
But the regular channels in which you receive trade cancellations, trade modification, etc., the same channel is going to be.
Again, Amit from Indore is asking, I'm not too sure whether there'll be input or not, but how many scripts are eligible as of now for this mechanism? He just wants to clarify.
So you just wait, because we will be publishing that in a short while in that same on this thing.
Okay. Manohar from Bangalore is again asking those trades which are cancelled through RTCM criteria, whether they'll be part of exchange trade file or not.
No. So these trades shall, I mean, consider it's there. These trades are not being traded in the initial this also. So it will not be part of the trade files or even the bow copy itself.
Okay. Members, many of you are asking the query on part of applicable penalty or violations, which Breshwar has at length mentioned a while ago. So we'll be skipping those questions. Mr. Aman Nangia just is raising one particular request. If they can, we can run this mechanism in mock with reduced thresholds so that they can get some alerts. I mean, if it is possible.
We'll have to evaluate the same, because there is, I mean, we'll have to see the feasibility. Accordingly, we'll take a call.
Okay. Again, there is one question from TBT data whether these reversal order number will be removed or not. Trade reversal order number. I mean, trade reversal number.
Trades shall not. The cancellation shall not be considered in any of the trade bow copy or any trade related files.
Okay. Okay, Mr. Ajay is again raising one particular scenario. Hypothetically, he's saying if today is expiry day and user tries to square off his position on last minute, which results into RTCM. But that should not be the case, right? Because post 3 p.m. it is not applicable. Right. Okay. Mr. Yashish Ashmira is asking, would they be still continue to have reversal files on NSE surveillance dashboard, or will it discontinue post RTCM going live?
No. So all that will continue. This is just a mechanism to help reduce that. It will not eliminate that. That obligation of the members to monitor non-genuine transaction will continue. The penalty structure will continue. And even the alerts on MSD will continue. Only thing is that because we are intervening as with the cancellations, these alerts in numbers might reduce because certain of these non-genuine transactions will be cancelled.
Okay. Gunashekaran is asking the broker closed his position due to margin call. If client purchases same position with different broker, then the trade will be cancelled or not, and how to handle this kind of issue. I mean, handling part, I am not too sure whether we'll be able to say.
One thing is, so if people are doing trading with the market, so there is until unless the corresponding party is the same, there is no way this is applicable, right?
Okay. Manohar from Bangalore is asking on the different side. He's asking if trading member witnesses that there are some trades executed at irrelevant price and he reaches out to exchange. Will exchange consider to cancel those trades?
No, so you have to follow the trade annulment request mechanism, where I think there is a window where you can apply, and the other trading member has to agree to it, and then it happens. So it will go with that route.
But it is altogether a different mechanism, and it has to satisfy those criteria which is separately laid down for annulment mechanism.
Yes.
There is a separate circular for that. Talks about trade annulment. This is about reversal.
Okay.
And this is auto cancel. So there is no manual intervention. There's completely objective criteria which is applied.
Okay. I guess one member is asking, despite implementation of RTCM, can members be receiving show cause notices for reversal trades identified during post-trade surveillance on T+1 or later?
Yes.
Okay, the answer is yes, Ajasa. Okay, I guess we have last few questions only. Let us see if any unanswered query is.
So we will just clarify why yes, because we are not addressing all possible scenarios that cannot be addressed, in fact. So we are just addressing intraday scenario, and that too between 10:30 and 3 or 9:30 and 3. And beyond that, or multiple days, if people design it in such a fashion for the non-genuine trade, they will still receive show cause notice.
Okay, Mr. Vishesh Nagpal is asking, during the exchange DR flip, will RTCM be applicable for those trades as well? Disaster recovery.
Yes. It's in live market, the same. It will also be live in the DR also, so it will be applicable.
Okay. Shilpa Sharma is asking, what if the second leg of transaction is being executed between 3 and 3:30? Then it will not be eligible for cancellation. Okay.
But do not design it that way, because then they will be getting caught in the penalty framework, and 100% penalty is applicable on that.
Okay, Mr. Nitesh is asking, any scenario where cancellation of FNO trades can lead to open positions going into physical delivery on expiry day?
So that's why we have kept on every day 3 to 3:30 open, where RTCM is not applicable. This is the precise purpose.
Okay. Then Mr. Jatin Mora from Rajkot is asking whether it is applicable for HFT or algo trades as well.
No bifurcation. So there is no bifurcation on the type of the order or the participant type, etc. It's applicable for each and every order, provided it satisfies not only that script which is eligible, but also those 4 criteria.
Okay. Then next member is asking whether it affects the hedge positions also, like future against options of that strike. I mean, at the
so that trade gets cancelled. So accordingly, your obligations, open positions will change.
Okay. This, I guess, probably you have answered, but again, will your clearing trade file will have all the executed and cancelled trades as well?
No, the cancel trades won't be there.
Obligation will not contain cancelled trades.
Okay. Again, Sachin Kumar just wants to clarify if clients also will be intimated if the trades are cancelled.
Oh, so whichever is from wherever he's punching the order, the member. So
the member, we will only communicate to the member.
Right.
Okay. Gunjan Bothra has a request, if it is possible and feasible, if we can give alerts to members until 15 Jan on live market data, so that they can.
Yeah, so we are trying that. So today or yesterday we have already sent one set of alerts to the members where the trades were eligible to get cancelled, and as and when we do further backtesting, we'll keep on giving till Jan 30th.
Okay, Bharat Purohit has a request if he can get the PPT. So, sir, within couple of days, we'll try to upload this particular session on our YouTube channel, NSE's YouTube channel, under which there will be a playlist called Open House Webinars, wherein you can just go and refer the session itself, and under which the slides also will be shown.
But this basically the entire slides contains the circular itself. So
Yes.
if you refer the circular, everything
And just reiterating what Bireshwar said, the example also given is illustrative only. So please don't go by those thresholds, right, Bireshwar? People should not take it that this will be the threshold and accordingly align the system. That should not be the case. Please take due note of that.
And we have specifically, that's why I mentioned is hypothetical thresholds.
Yes. Just 1 or 2 minutes because I'm just screening 3-4 last questions which have popped up. Okay, Shashwat is asking technically at the client end, all FNO trade cancellation message will be same as CM trade cancellation message or not? That he wants to clarify.
Yeah, the same. The structure is same. Message also remains same. Obviously, it will have the trade detail, trade number, and so.
Okay. Last question, probably what we have received. Jyoti Thakur from Mumbai is asking whether the SAID mechanism is applicable for ETFs as well or not.
So for cash market, ETFs are excluded. Obviously, in derivatives we have contracts. We don't have ETFs as a underlying itself.
Okay. I believe we have covered most of the questions and members. We have received more than 100 questions, it seems, but many of the questions were of the similar nature, so we had to skip that. And probably with this, with a brief summary closing remarks from Bireshwar and Binoy, we'd like to close this session. So Bireshwar, Binoy, any
So
closing remarks?
it's an attempt actually to help the members so that finally they are not the reversals don't result into penalty. So it's an attempt for an intraday session, and that too between 9:30 and 3. So we are trying to monitor it online in an objective fashion and trying to cancel as many less trades as possible with the objective of also controlling the reversal trades. So that's an objective which we are trying to do here. We have been successful in cash market where intraday, most of the intraday trades which are resulting into proper reversals have got cancelled, and between 9:30 and 3, the same we are replicating here. However, this does not actually take away the obligation of the members to monitor non-genuine trades at their end, because non-genuine trades can still happen after 3 o'clock to 3:30, can still happen on a intraday basis. One day you take the position, second day you square off. We are working on that also. Let's see how we can do that. That's a more complex system, but we're working on that.
Okay, and before we just close the session, one last question which has come from Nikhil. So he's asking, can we assume fill price and fill number is correct in the resulting trade cancellation message? I mean, question probably is not that clear, but or else if we can just request members, not Mr. Nikhil, other members also if they want to write. So if you can just
write. In our circular itself, in the last, we have mentioned a email ID where you can post your questions and we'll get back to you with answers.
Okay. Just to tell, it is surveillance@nsc.co.in, which is mentioned in the circular itself. Please be careful with the spelling so that it doesn't bounce back. I'll spell it out. It is surveillance@nsc.co.in. So you can always write to this particular ID and the concerned team will reach back to you with the response, relevant response. Any other closing remarks? Or so Binoy, we can close it.
Yeah, I think we have covered.
Sure. So thank you, members and other market participants to join today's session. We hope that we have been able to quickly conduct this session after the circular issuance, and we are able to provide you enough information and able to answer the queries that you raised. Still, you can keep writing to concerned team because there are certain days before this goes into a live implementation. We'll be happy to help you out and answer back to you wherever possible. So with this, we are calling it end of today's session. We'll keep doing more and more open house webinars as you have been attending. Thank you. Thank you very much again. And thank you,
Thank you,
Binoy and Bireshwar, for being part of this session.
Thank you, participants.
Thank you.
Have a great week ahead. Thanks.